All right, let's get into this video, you guys. Today we're going to be doing a trade breakdown on the NASDAQ futures. Today is August the 11th, and today we had a pretty good trading day, man. We was patient today. We managed our risks. We pretty much did not everything perfect, but just about right. Not even trying to toot my own horn, but when you finally do something right, you got to eventually give yourself a pat on the back, especially if you're like myself and you're always beating yourself up. So let's get into this breakdown. All right, I'm going to show you guys what's on my chart here. All right, let's show you guys what's on the chart. And then we're going to go straight into I'm going to put a horizontal line on the 920 candle just so I can know where I'm at. All right, you guys. So let's take a look at what we have here. I am going to delete this. Yeah, and then I'm going to keep this, right? Because this is what I had on my chart when I went live last night. I know a lot of you probably haven't had the time to watch that entire live, but I did a silent annotation on my live, and I pretty much told you guys this little box is where I'm looking for the market to draw up into, and this is a order block on the 1 hour time frame. So if you guys want to go back and watch that screen from August the 10th, I believe it started August 10th. I screamed a silent video. I titled it Silent Annotations as well, so you guys can know. But this is this order block that I was looking at right here, right? Why didn't I use this order block? Why did I choose this one instead? Simply just because this one is higher, right? And based on back testing, based on all of the things that I have, recently learned from just watching price myself, not even just from studying ICT, but from just me watching price and back testing, I have learned to just use this order block, right? So whenever there's a scenario where there's an order block right here, I'll use this one. Notice how price did respect this one just a little bit, right? We did respect that right there, but we didn't invalidate this one just yet. But it gets really close up there, right? So with all of this in mind, okay, we're gonna drop down. Okay, we have the new day opening gap in here. You guys know I've been had that on my chart. Whenever there's a new opening day gap, you have to make sure y'all put that on your chart every time, right? The new day opening gap starts on Sunday at 6 p.m. I mean, no, not Sunday. Sorry, it's on the weekdays at 6 p.m. The new week opening gap is on Sunday at 6 p.m. Right? So you guys want to make sure y'all put all of that on your chart. I'm going to drop down into the 15 minutes so I can show you guys what I was looking at today. Today we had liquidity right here. We had liquidity right here. We had liquidity here. Price came down here pre-market, swept some of this liquidity, right? And then hit the midpoint of the new day opening gap, started to retrace, had a first presented fair value gap in here somewhere. And then as you guys can see right here, when the market opened, we broke below this first presented, came back up, held that a little bit, and then we kept going higher until we touched that 1 hour order block. Then that's when we had our sell off, right? And that was pretty much the entire day's this was Monday's entire day, right? This was everything that happened Monday. So how did we find our trade, right? And what are we looking at? Well, today I'm going to give you guys the quick outline of one of the main things that we're going to be talking about today is when to get inside of the trade. How do you know, right, when to get in? Because we all want to get in when price starts to really move instead of getting in and sitting inside of, choppy price action or over leveraging when we think the market is going to run, but it's just another fake out, right? That's what we're going to be talking about in this video today, right? And I talk about pretty much the same thing in all of my videos. So if you guys watch any of my videos, they're going to be gems in there for you guys, all right? So I was just showing y'all the liquidity, right? Because I don't have everything on my chart that I had when I was actually trading the markets. You know, I take things off. So I'm showing y'all where my liquidity is at. As you guys can see right here, we did eventually go down here and sweep this liquidity. I had this gap right here. This was a 15-minute bag. Bag stands for breakaway gap. So I was anticipating that if the market didn't hit this gap right here, maybe it was going to want to come down and take this liquidity maybe early in the morning, and then maybe push past all of this later in the evening session, right? That was one of my ideas that I laid out. I said, if we go down here and take this liquidity first, and then if we don't touch this gap, we're going to be really making big moves to the upside. But as you guys can see, that's not what happened, right? We started with sweeping all of this liquidity up here first, and then we made our move to the downside to take out the rest of that liquidity, right? So let's go into the lower time frames. I'm going to drop down into the 1 minute time frame so I can show you guys. So like I said, when the market open, we're about right in here. When the market open, I'll move this line to the 929 candle. Okay, and then we had our first presented fair value gap right here. Remember, you guys, the first presented fair value gap is never the 930 candle. It's everything after 930. So 931 and after, that's when you can start looking for the first presented fair value gap on your chart, and it have to be on a 1 minute time frame, right? So we had price came down right here, swept a little bit of liquidity, but not all. And then we came back up, had this little bit of a low right here. We made a little bit of a low right in here. We came through, swept that liquidity, had a slow, cringy bounce up, right? And then we had some liquidity that was on my chart at the time that we was sweeping up here. And then right before we seen this retracement, right? So why didn't I take the buy, right? So you guys hear me talk about first presented fair value gaps all the time. Why didn't I take any of these buys? Well, I'll tell you, right? And this is very important when it comes to learning ICT concepts and when it comes to learning how to get in at the right moment when the market is really getting ready to take off, so that you don't have to sit in all of this choppy price action, right? Because yes, you could have taken a buy, and yes, you could have eked out a little small win, but do you really want to be a part of all of this? So me personally, I missed all of this for the morning session, right? I didn't start to, look for a trade until we had got up here. We swept. It was another high right above here. It was a daily high, and then we swept that, and then we came up here, and then we started to sell off, right? Now, as we're selling off, I will be honest with you guys. I was still buying, right? I was buying in here, looking for this to be the breakaway gap right here, right? So I was looking for this little area right here. As you guys can see, there's a little fair value gap right in there. I had my stop loss in here, and as the market came down, right, I had a Fibonacci drawn on my chart like this, okay? And as the market came down, right below this yellow line, which is the midpoint of this range, I was looking at this to hold price up, right? Because at the time, it started to seem like we was going to be very bullish, right? We swept liquidity. We had a little breakaway gap. It wasn't really the most beautiful breakaway gap, but it still qualifies as a breakaway gap, right? So I was buying on this retracement. But after a while, I started realizing price was a little bit choppy. We did just sweep liquidity going to the upside, and we tapped into that 1 hour order block, and now we're starting to pull back, right? So price was getting a little bit too choppy. We had these little 2 1 minute order blocks as well that was keeping price down, right? So I exited out of that trade for I think I had about a $25 profit or something like that, right? And then something told me, hey, Tay, go check a different time frame. So I got off the 1 minute, that's when I went to the 5-minute time frame. And as you guys can see, this was the range that I just had marked out on a 5-minute time frame now. So now when price is continuing to make its way down, I'm thinking about breakaway gaps, you guys, because breakaway gaps is what you want to see after you see a sweep of liquidity. That is going to really let you know that it is now time to get in the market, right? So once I seen this breakaway gap right here on a 5-minute time frame, I marked that out on my chart and I said, you know what? I don't think price is going to get back over this, right? And here was my last confirmation. We had these two green candles right here on the 5-minute. So I was at first thinking price is going to want to come back up here and sweep this swing high right here on the 5-minute time frame. I had my Fibonacci tool drawn out like this and like this, right? Because at the time this candle was made. So I was thinking, wow, we got this swing high right here that's right below the midpoint of this range. I think price could want to go back up there and sweep that. But when you think about it, right, when price becomes bullish or when price becomes very bearish or very bullish, typically you're not going to see, for example, right, if the price is bullish, you're not going to see swing lows be broken. And vice versa. If the price is bearish, you're not going to see swing highs be broken, right? You're going to, because the price is going to be aggressively moving in one direction. So I noticed when these two candles was being made in real time, we couldn't get over these two little order blocks, right? Because this is an order block. These two green candles are an order block. So we couldn't get over that. So that was my first sign that, hey, we might be getting ready to take off, right? And then when price came down here one more time, every time that it came back up to the midpoint of these order blocks, these two right here, we couldn't get over these two as well, right? So that's when I started really loading up. I think all the way up right above here, right around here as we was going down, I had about like 2 positions right here, but right in here is where I really loaded up, and my stop loss was I think I had it either inside of this breakaway gap or I had it right on top of this wick right here, right? So I was risking about $70 per entry. And I was looking to make about 180 per entry. So I almost had a close to a 3-to-1. I didn't really make much on the trade because, like I tell you guys in all of my videos, I have a really hard time of holding trades for too long, especially when it's a cringy ride down. Right, so typically when I trade breakaway gaps, I like to trade them because it's an indicator that price is not only getting ready to move in one direction, but it's getting ready to do it really fast. That's what I like most about breakaway gaps, right? But on a Monday, you can't really expect price to do too much, right? You can't really expect that much price action. But as you guys can see, we eventually hit all of our targets, right? We had a target that was right here at the midpoint of the new day opening gap. That's the one I was going to take and just be happy. I think I would have been up like $1,000. Then we had this target down here. I would have been up like around maybe 15 or 1,300 or 1,400, somewhere around there. Then if I would have got this target, I would have completed my entire phase 1 today, right? So the overall point of this video is for me to show you guys the difference between when price sweeps liquidity and just comes back versus when price sweeps liquidity and then makes a breakaway gap, right? Completely different. If you want to stay away from this type of price action, the choppiness, eventually you want to learn how to wait for liquidity to be swept and then wait for a breakaway gap either on the 1-minute, the 5-minute, or the 15-minute time frame, right? Those are the time frames you want to be looking for the breakaway gap to form on, right? And then when you're using this strategy as well, don't over leverage. You will eventually learn how to put a good amount of size on your trade, but you could always still be wrong as well. So don't over leverage and test it out, right? Look at what happened when price came down here swept that liquidity, and then this little breakaway gap right here was made. Look how fast price went right up, took that liquidity. So that's my trade breakdown for today, you guys. I wanted to keep this video extra short. Make sure if y'all going to go buy a prop firm account with these 4 companies, Trade Day, Tradeify, Funder Pro, or Apex Funding, make sure y'all use my code, which is code trucking. And also, if you haven't signed up already, click the description below and click on one of my links. That's the best way to support the channel. By the way, you guys, the other best way to support the channel is just by dropping a like if you haven't already, right? Drop a like on this video. Watch as much of the video as you can and subscribe to the channel. And that's the best way to support me, because I need all of the support that I can get. And I appreciate those of you who have been rocking with me for this entire time. So I'll see y'all in the next video. I'm going to try to go live again tomorrow. And that's that, man. Y'all, hope y'all had a good trading day. If not, don't worry about it. You're not a loser if you have one red day. Just got to bounce back even harder tomorrow. So see y'all in the next one, man. Peace out.